If you're struggling with multiple debts and wondering if debt consolidation is right for you, then keep on watching this video. Hello and welcome to my channel. My name is Layla and I talk about all things personal finance. In this video, I'm going to cover what debt consolidation even is, who would benefit from debt consolidation versus who may not benefit, and then I'll also share some helpful tips to consider. Debt consolidation is the process of combining multiple debts into one loan or single debt. And basically the goal with consolidation is to simplify things, and then you should be able to lower your monthly payments as well as lower your interest rate. For example, let's say that you have 3 credit cards that have revolving debt on them. So they're carrying a balance from month to month. Let's say that one card is at 20%, another card is at 25%, and then the third card is at 29%. All very high interest rates, right? That's pretty typical with credit cards. And let's say the total debt across all 3 cards is about $16,000. So you feel like you're ready for consolidation. You've considered all the things that I'm going to talk about in this video, and you apply for a personal loan. You get approved for a $20,000 personal loan with a 13% interest rate. And now what you're going to do with that loan is pay for all 3 of those credit cards. And now all 3, that $16,000 total balance between the 3 cards, is now in this personal loan. And instead of having 3 different interest rates, 3 different minimum payments, 3 different due dates, you are going to have 1 minimum payment, 1 interest rate, and 1 due date. So all 3 of those got lumped into one, and now you are going to be saving money on interest. Now 13% is still a pretty high interest rate, but now things are much more simplified with your financial situation. And of course, 13% is much better than anything above 20%. So for this situation, in this example, you would be saving quite a bit of money on interest in the long run. Now there are different types of debt consolidation. The example I just used was with a personal loan, but you can also do balance transfers. So opening up a credit card to do a balance transfer from one card to another. I'm going to have a whole separate video on that. So once that's up, I will have that linked down below in my description box. And then another common type are home equity loans, or HELOC. So this is when you're using the equity in your home, take out a loan against that, and then consolidate higher interest debt. I'm not going to go into great detail of the different types here, but there are different options. Debt consolidation will benefit you most if you have high interest debts. So if you have some debts that are like 8%, 9%, 10%, you probably don't need to do any sort of consolidation, because if you apply for a loan, it's going to be a similar rate, potentially even higher, and you wouldn't be saving money on interest. But if you have quite a bit of debt that's over 20%, or even if it's like above 15%, you can probably consolidate and get a better rate. If you have multiple debts with lower interest rates, I could understand why you would want to simplify things and maybe all have it under one loan. And that's not necessarily a bad idea. Just make sure you look at the interest rates. And if you're not going to be saving money by getting a loan with a low interest rate or overall average lower than what your debts are currently, then it may not be worth it. So it really just depends on the rate that you receive, but you may be better off just leaving your debts as they are if that's your situation. And that leads me to the second group who may benefit from consolidating, and that would be people who struggle with multiple payments. So again, consolidating your debts can really simplify things, and if you find it overwhelming to have like 10 different debts with all these different due dates, all these different minimum payments, and you think it would be worth it to consolidate, even if that interest rate is going to be similar to what you're currently paying, it may still be worth it. I do suggest still making sure that it's worth it to consolidate, but absolutely it's going to be much easier to manage 3, 2, or maybe even just 1 payment, 1 account versus, 5 different accounts. Consolidation is going to be best for those with a good credit score who will then qualify for a lower interest rate. We all know that credit scores lead to better interest rates. So if your score is kind of on the low end, you may get an offer that is, still way too high of an interest rate. It's not really going to benefit you. You could end up having a really large monthly payment and just kind of add to the stress of your financial situation. So if you're not feeling too confident with your credit score, I would first work on trying to increase that. As long as you're paying down debt and making progress on that, your score will naturally increase. So once you do get it increase, you can feel more confident to consolidate debt and get that better interest rate. So it's actually worth it. So in general, debt consolidation definitely helps you to have a structured repayment plan, but always look at the numbers, look at what is being offered to you, consider the type of debts you have, the interest rates. All of that is actually important before actually taking the leap. So first up would be people with bad spending habits who may rack up new debt. So going back to that example before, where if you had 3 different credit cards, 3 high interest rates, and then you consolidate, so that $16,000 of credit card debt is now under a personal loan, and your credit card balances will be $0. So that means you can rack up $16,000 or more on those credit cards, and then you also have $16,000 on this personal loan, and you just made things just double as difficult. There's a lot of psychology around money, of course, and I know that sometimes people will see, like, if you have money in the bank or if you have a larger emergency fund, people feel more tempted to spend that. It's the same thing with credit cards, where if they see, okay, I now have a $0 balance, but my credit limit is $6,000, $7,000, $8,000, whatever it may be, so now I can add more money to that. That happens to a lot of people. And if you don't trust yourself to not get into that situation, consolidation may not be best for you. It may be best to just tackle that debt, push through it as fast as possible. And then you can close those accounts or freeze those accounts and move on. And you could do the same thing if you do consolidate. Let's say you get that personal loan. Now those credit cards are at a $0 balance. You could close them if you wanted to. Not always recommended, just because that's going to impact your credit score. But if you don't trust yourself and you feel like that is the next best step for you, go ahead and do that, or at the very least freeze them so you don't rack up any new debt. It also may not be best for those with a low credit score to consolidate debt because you may not get a lower interest rate. It still may be worth it to try, but just keep in mind that if you apply for a personal loan or any sort of consolidation, that is going to be a ding against your credit score, so it's going to lower things even further. So like I said before, if you can work on just raising that credit score on your own, pay down as much debt as possible, make your payments on time, get that score to increase, and then consider applying for a personal loan or other form of consolidation so you can get a better rate. But there's no point of consolidating your debt if you're not going to be saving on interest. It really just depends on the current interest rates that you have, because, if they're 29%, you probably are going to get a loan that is much lower than that. But if you're trying to consolidate debts that are at 14% or 10%, maybe just wait a little bit or just tackle that debt on your own. And then if you're considering consolidating federal student loans, I would just urge you to be careful about that and just really give it some thought. So if you are trying to consolidate federal student loans into private student loans or into any other type of loan, then you no longer get those benefits that federal loans offer. So, during the pandemic, for example, anybody who had federal student loans did not have to make payments and interest was at 0%. However, the people who consolidated that debt into private student loans not held by the federal government or into, a balance transfer card, whatever it was that they did not get that benefit. They still had to make payments and they still had interest to pay. The other benefit with federal student loans is that you can put those into deferment. So if something were to come up, you could pause payments on those and not face any sort of penalty. But if those student loans are now on a personal loan or on a credit card, it's not as easy to defer, if at all, and you're just still going to have to make those payments. So just be really careful about consolidating student loans. It's not always worth it. Luckily with federal student loans too, the interest rates aren't crazy high. Now, of course, there are options out there that could save you money by consolidating, but for the most part, I suggest for people to, either choose the snowball or the avalanche and tackle their student loans that way. First thing is just be careful with any loans that you're choosing to take out. Make sure that there's no crazy fees, that you're not tying up any assets or, making your term super longer. The amount of time that you're having to make those payments is extended to years and years, or any sort of risks coming with it. Just be sure to do your research before even applying for a loan. Read the fine print, make sure you've got yourself covered. As far as actually finding personal loans that you can apply for, you may receive some emails with offers. Just be careful with those. Make sure you trust the company and do your research. If you use the app Credit Karma, there's oftentimes that they will say, oh, you're pre-approved for this personal loan at this interest rate. Those are of course not a guarantee, but a great place to start. And then aside from that, for most people, I just suggest a Google search. Type in best personal loans and check out NerdWallet's website or Bankrate, something that puts everything together and you can clearly see the rates that are currently being offered, the credit score that you need. All that information in one place is going to help you to make your decision. Definitely check your credit score before applying. And as I was just talking about with NerdWallet's website, where they kind of put everything together and they tell you the minimum credit score that you need or the range of credit score that you need, look at that number. Now, those ranges that they give may not be 100% accurate. It's like a best estimate of the people who would qualify for a loan with those lenders. But if you don't fall within that range, or if you don't have that minimum credit score, it's probably best for you to work on building it up before applying. Because if you do end up applying and getting rejected, of course, that's going to hurt your credit score and it's going to be very frustrating for you and kind of just make you feel negative about your situation. So work on building that credit score up and then apply. Be sure to compare interest rates and fees when you're looking at the different lending options. Now, oftentimes these lenders have a $0 origination fee, which is great, but there are some that do have fees, so just be on the lookout for that, and then you can make your decision based on the interest rate that they're offering, the term, the amount, the fee itself. Definitely important to compare your options just so you can optimize your savings. Be careful about the loan term. So yes, you may take out a personal loan and it has a lower interest rate and maybe even a lower minimum payment compared to everything that you were paying before. But if the life of that loan is like 15 years or a super long amount of time, it may not actually be saving you money. So of course you want to find an offer that you're comfortable with, you're able to make that minimum payment and the term is reasonable, so you're actually going to be saving money on that consolidation. And then of course, even better if you can just make extra payments on top of that minimum payment and speed up the payoff process. Depends on your situation, but that of course is going to serve you even more and save you money on interest. If you're consolidating credit card debt, I kind of touched on this before, but don't rack up new debt. You know, it's okay to use your credit cards if you can use them responsibly, but if you don't trust yourself to do that, close those cards if you absolutely need to. Not always recommended because it is going to affect your credit score, but at least at the minimum, freeze those accounts, put them somewhere that you're not going to touch them, not going to use them, so that you don't end up in the same situation or even worse of a situation. And final thing I would say here is consider some alternatives. You don't have to absolutely consolidate your debt. Maybe you end up getting a rejection from a loan that you applied for and now you feel upset about that. Of course, consolidating debt could be helpful for many people, but it's not absolutely necessary. So you could try negotiating with creditors. You can work on increasing your income. You can try different budgeting strategies, or maybe you need to try out a different debt payoff plan. Just find different ways to go about tackling your debt. And you may come to realize that you don't need to consolidate whatsoever because you don't want to or you don't need to. Or by making those changes, you may increase your credit score and then can try again 6 months from now or a year from now and get approved. So key takeaways here is that debt consolidation is not a magic fix, but it can be a great tool when tackling your debt. And then definitely do your research and run the numbers before making a decision. Let me know if y'all have any questions on debt consolidation. I will also have a video specifically on balance transfers that will be linked down below. I also have a number of related videos in my description box, so be sure to check those out. Thank you so much for watching. I would really appreciate if you give this video a thumbs up, subscribe if you haven't already, and I will see you in my next one.